Hey everybody, Buffy the Rate Slayer here, and we are back with the third episode of the June Weekly Market Insight Series, coming directly from the Capital Markets Trading Desk, right here at SunWest Mortgage Company. This week, U.S. equity futures and European stocks meandered in cautious trade, with investor attention focused on how aggressive the Fed and European Central Bank will be in the fight against inflation. Federal Reserve officials paused their series of interest rate hikes, but projected borrowing costs will go higher than previously expected, owing to what Chair Jerome Powell called surprisingly persistent inflation and labor market strength. Policymakers on Wednesday left rates in a range of 5% to 5.25%, taking their first breather in a 15-month hiking campaign that included 4 jumbo-sized 75 basis point increases last year. Contrary to this, the European Central Bank, representing the 19-nation Eurozone, intensified its battle against record inflation by hiking interest rates by another quarter point to 3.5%, the highest level in more than 2 decades, and in line with the expectations of economists and traders. So, what else is steering the market? I'll tell you. The Consumer Price Index increased just 0.1% for the month, bringing the annual level down to 4%. That 12-month increase was the smallest since March 2021. Core inflation rose 0.4% on the month and was still up 5.3% from a year ago. Meanwhile, the U.S. small business sentiment in May held close to the lowest level in a decade. The National Federation of Independent Business Optimism Index ticked up to 89.4 from an April reading of 89. That was the weakest since January 2013. U.S. retail sales unexpectedly rose in May, showcasing resilient consumer demand in the face of mounting economic challenges. On Thursday, Commerce Department data showed the value of retail purchases climbed 0.3% after a 0.4% gain in April. Excluding autos and gasoline, sales were up 0.4%. Weekly jobless claims numbers were slightly above estimates at 262,000 compared to an estimate of 245,000. Continuing claims for the week ending June 3rd rose by 20,000 to nearly 1.8 million, though the 4-week moving average continued sliding incrementally. Now let me update you on the housing market, okay? Well, U.S. mortgage applications for home purchases increased for the first time since early May as borrowing costs eased. The Mortgage Bankers Association index of applications for home purchases rose 7.6% in the week ending June 9th. The overall measure of the mortgage applications increased 7.2%, the biggest weekly advance in 3 months. Let me just wrap it up for you, okay? At a press conference Wednesday, Powell faced the challenging task of explaining 2 possibly contradictory policies, deciding to leave rates unchanged, following 10 straight hikes, while also indicating that at least 2 more increases might be necessary this year, with the first possibly as soon as July. Policymakers will see another round of inflation and jobs data before their July 25th, 26th meeting. So, that's all we have for this week, guys. Please, as always, join me again next week, okay? I'd love to see you. Thanks for supporting our channel. And as usual, stay updated with our news and our trading desk. We'll keep you informed with pricing incentives. Have a fantastic weekend, everybody. Buffy, out.